All right, smart money, smsfxmentor.com, right? So guys, we got rid of the holidays. The holidays is over, right? So Christmas is over. Now, the next thing we need to do is get ready for this new year, all right? So we're trying to get ready for this new year. We want to learn new things. We want to learn how to trade. We want to learn how to be better. We have a new goal. We got the top of the year. We got time to invest. We got time to do everything, restart, reset, right? At the beginning of the year, you got time to reset, right? You need to come up with life goals going into the next year, right? Because we all know a year gonna go past. Next thing you know, that year gonna go past and a decade gonna go past, right? 10 years gonna fly past. And guess what? When you don't get started, that's when you're just gonna be all over the place, jumbling, mumbling, and jumbling. All right. So we want you guys to be set and prepared. All right. So now we're gonna pretty much get into um um moving averages. Okay. So they're very, very important, right? So more than likely you always see these on the screen, right? And pretty much a moving average is just you have three different kinds, right? Well, you got multiple different kinds, but you got simple moving average. You have exponential moving average, just to name a few, right? Some of the main ones. But they're very, very important. And I want to show you guys how to pretty much, use them on the charts. All right. So um, moving averages, uh, definition. All right. So we're gonna go ahead and tap into this definition, so you guys can understand and know what moving average is. All right. So the moving average, MA indicator, is one of the most used technical indicators for Forex traders. It's a formula used to calculate the average of markets movement over a longer time period, usually weeks or months rather than days, to identify trends. All right. So pretty much you use it to identify the trend. Okay, guys. And so let's just further do, let's just hop right into the screen. Let me share this with you guys. And then let me go ahead and pull up the chart. And so we can kind of pretty much identify the trend, right? Now, people use different types of EMAs. I could tell you a couple main ones, right? So like the 50 EMA and like the 200 EMA, right? So when identifying trend, you want to be on like bigger time frames too as well, all right? Um, why this is giving me a hard time. All right, there we go. So if you guys can see the screen, we're looking at this USD CHF pair. Um, um, and we're going to move on. All right. So pretty much you want to look at a bigger time frame when identifying the trend, okay? And we're going to pretty much show you how the EMAs are pretty much used throughout understanding and identifying which way price is going. All right. Um, now, um, when you're back testing or when you're looking for a trend, you're pretty much wanting price, right? So you see price, and then you see EMA, right? So this is a gold line. This is magical gold line. It's my EMA. Price is these candlesticks right here, and pretty much self-explanatory, right? Um, anytime you see price underneath your moving average, right? You're going to be looking for sales, okay? Sales, right? Sales, sales. Now, of course, guys, this is just a one more confluence add on to your chart. This is not the end all be all. This is not, oh, I'm about to just use the moving average, and just because it's underneath, can say, hey, you know what, sell, because look right here, there goes some buyers, right? There goes some more buyers. There goes some more buying, right? So we have to understand what we need to look at it, you know what I'm saying, with, right? As opposed to just guessing. So I also put an EMA down here on my stochastics. Uh or RSI, I'm sorry, on my RSI, because it's some fact it's the same thing. So when my RSI get underneath here, I'm looking for sales, right? RSI get underneath here, I'm looking. So like right here, with confluences, remember with confluences, see how it's underneath here, it's a big gap. Also, we see a double top and we see price underneath here, which is a big, a big difference or probability call giving me that, what price could be going down to the downside. So everything not clear up here, sometimes it'll be clear here, right? So pull back here, it was clear here, and we start selling. All right. But as we know, once price underneath this EMA or this EMA here as well, that's what we're looking for. It wasn't as clear here. It wasn't underneath here. But here, if you look at it here, when it fell underneath here, it gave us that reason, pretty much reasoning to continue to sell. All right. And so forth and so forth, right? So, Cam, what about when prices above the EMA? All right. So when prices above the EMA, we're looking for buys. Okay. More than likely, more buyers are going to step in and when prices above the EMA. So even right here, boom, right here, and when it didn't make sense, right, we come right here, and price went back up above here, boom, price pushed back up. Same thing here, boom, right here, boom. Okay, here, boom. Okay. Same difference, like I said, is down here. Long as my RSI is above this point, I'm looking for buys more likely. Not saying always because, like I said, look right here. You have to understand when price starts to. So price is only pretty much doing three things, right? And that's what I'm gonna get into in the next video. Is that okay? When price is also tightening on the EMA, right? So like pretty much like tightening on the EMA, pretty much moving in a sideways path right here, like going sideways, not really going up or down, but going up and down at the same time, and more so like real tight on the EMA. That's called consolidation. Okay, guys. So more than likely, when price is really tight, going back and forth on the EMA, then pretty much we're looking at then pretty much okay, tomorrow at 7 p.m. Eastern. Okay. Yeah. All right, be there, be square, buddy. All right, so another meeting that I have to do tomorrow at 7 p.m. Eastern. I did one today at 6:30. That's why I'm up so early, giving you guys a video. So yeah, price is tightening on the AMA. Also same thing like I said here, prices underneath. Um, um, we're more than likely looking for sales. So when those sell opportunities come up, we'll pretty much take those sell opportunities. Um, and we have tightening here on the EMA, which is consolidation. And then we have price above up above. So more than likely, we're looking for buys, um, throughout, that time period or when price get or when you're trading or your schedule or your session that you're trading in that time frame. That's what we're looking for. All right. So don't want to hold you guys too much longer on this. This is what you call EMA. You do have different kinds. We can go over here to indicators. And so you have, let's type in, all you have to do is pretty much probably type in MA. So you got um moving average exponential, moving average simple, and then you got moving average weighted. All right. Those are the main three. Okay. Let me start out one. But these are the main three: exponential, simple, and weighted. All right. So you got WMA, SMA, and EMA. All right. Those are the main three. And then you can go on and see which ones that you like to use, naming a couple main ones. 200 moving average exponential, the 50 moving average exponential, uh, and then like smaller ones, you pretty much got to play with them. But um, I believe it's eight. I believe it's 8 and 14. I believe 14 because that would average like every 2 weeks, right? So for every 14 candles. All right. And so that's pretty much how people look at it, and all depending on what you're trying to do. If you guys want what I use, all you have to do is join the free Discord. I put and provide all that information in there, or join the free Telegram. All that information on what EMA size I use is in there. All right, guys. So SMSFXmentor.com. Let's get it, gang, 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 gang.